Okay, good afternoon, everybody. I wanted to share this with you guys real quick. This is just going to be a quick little video. I posted on Facebook recently my statistics on my portfolio, and I saw that you guys had a lot of interest in what I was investing in, and I wanted to make a quick little video to show you what my portfolio looks like. I've exceeded the S&P 500 over the last 5 days, or over the last 90 days by over two times, right? So that's the financial speed limit is the S&P 500, and I've been able to exceed that um, at least over the last 90 days. I can say also that I have beaten the S&P over the last several years. But today we're just going to look at my results over the last 90 days. I'm going to show you what portfolio did it, how I was able to how I was able to exceed what the S&P 500 is doing. And so I'm excited to share this with you guys. You guys requested this, so I wanted to show you guys um, what's in my portfolio, what I'm looking to add, and all that kind of stuff. Now, before we get started, real quick thing. I am not a registered financial advisor, so please don't take my information as a fact or this information may not be tailored to you. This is stuff that I am doing. It works for me and my goals, my time in life. My income, credit, all those kinds of things factor into what kind of investor or trader I'm going to be. It could be totally different from what's adequate for you. Okay, so please seek a financial advisor if you are looking to invest your money. This is just what I'm doing. Again, it is up to you what you want to do. But again, this is just my little disclaimer here. Don't want you guys going out there and just copying my portfolio if it's not what matches you. Again, I take a lot of risks, so those risks could pan out in the wrong direction for you. So anyway, with that cleared up, I do want to share with you though what I've done and how I've been able to get these types of returns over the last at least the last little while. So this is a cool little metric. I use a tool called Empower. Over 18 million Americans use Empower. You can connect all of your bank accounts, your credit card. You can connect your portfolios with Fidelity, Vanguard, or wherever you have money sitting around or invested. You can connect, if you own a home, if you have vehicles, you can connect everything to it. So it'll show you what your net worth is. It'll show you what your liabilities are, what your assets are. It keeps track of what you're spending each month, and it will send you advice, which is really, really cool. So it'll tell you like, hey, you should probably save more money, or hey, you should, you spent more this month than last month, or you spent less this month. Good job. It's a pretty cool little metric. And this is one of the things they do is they look at, how much money, or this is your dashboard of your portfolio here. And this is just how I've performed over the last, like I said, over the last 90 days. So you can see the U index, and I guess they've registered this metrics, which is really, really cool. So over the last 90 days, I've made a 17% return on this portfolio, which I'm going to show you guys here in just a moment. The S&P, which is basically just the top 500 companies in America, has made a 9.6% return. Um, and the foreign stock is up 7% in that same period. Bond market's down slightly over the last 90 days. And so this is where I'm at, over two times the S&P right now. And there's a couple of reasons for this. So I'm going to dive into a couple of reasons why this has happened. But first, I want to dive into my philosophy with my style of investing and, my time in life and why I do certain things. So, yeah, so you'll notice here at the beginning of my portfolio, I have a lot of cryptocurrencies. I do have a lot of equities as well. But one of the reasons why I'm heavily invested in crypto is because we're in the middle of the crypto bull cycle. So I'm a trader by nature. I trade things, I invest in things, and I look for cyclical cycles, right? So I very much am a cyclical trader. So I'm looking for patterns. I'm watching interest rates and I'm deciding when to invest and when not to invest on a lot of fundamental patterns, right? So right now I have a lot of risk on in the crypto market because we're in the middle of a cycle. So naturally I'm going to be putting more money in that direction. When the cycle comes to an end in 2025, which is what I expect in mid to end 2025, I will go out and start to liquidate these positions and either go some cash and perhaps funnel a lot of that back into equities. I actually took money out of equities over the last year and a half to put into crypto. And I will do the same thing again, but just reverse. I'll take out of crypto to put into equities when this cycle is over, most likely. By the way, this does not include my real estate properties. This just includes, this is just my, like what's in my, all the different portfolios that I have as far as like equities go, cryptocurrencies, cash, that kind of stuff, right? And this is where I'm sitting. So as far as my philosophy goes, like I invest into like I love equities. I invest into equities. So meaning like stocks and ETFs. I want to get back into more equities, but I can't pass up the cycle that we're in right now. Once that cycle, so I did this back in, you guys know I did this back in 2019 and 2020. I went mostly cryptos in 2019, 2020. And then end of 2021, got out of most cryptos, started to short cryptos, and then we started to go into equities again. And now, 2022, 2023, we were in equities. Now we've kind of come out of equities. 2024, we're going into cryptos again, and so on. We repeat the cycle. Okay. So that's part of my philosophy. So, I diversify quite a bit in this particular portfolio. This is not like, my trading that I do in Forex. This is where the pillars get kept. This is where the money stays, essentially. Okay. These are the big buckets, so to speak, if that's a way to look at it as well. This is where the money goes. Okay. All right. So the number one holding, and no surprise, right? The number one holding in my bucket is Bitcoin. Okay. So 23%, 23.10% of my entire portfolio is in Bitcoin. Nearly a quarter of my portfolio is just Bitcoin, not even other cryptos. That's just Bitcoin. This is big. That is a big amount, right? Normally, this is going to be some kind of like S&P 500 index. This is going to be like, a target date fund, or you're going to have like big equity sitting right here at the very top. That's not the case right now because again, I'm a cyclical trader, and in order to understand the portfolio that I have, you need to understand that that's the style of trading that and investing that I subscribe to. You know, I'm not going to just sit in a um, one-stop shop, um, equity ETF, index fund type of thing forever, when I can take advantage of these cycles and I've learned how to take advantage of these cycles, right? Um, so that's why I'm in Bitcoin. That number may get a little bit bigger actually up until middle of next year. I could see that becoming maybe 30% of the portfolio by middle of next year. By May or June of 2025, that number will decrease. Bitcoin will start to fall off. Either cash will become bigger, probably cash will become bigger, just because I also have plans to buy a few more rentals next year when the Bitcoin cycle's over. Or we'll probably funnel some of that money into more equities at that point. So that's Bitcoin. That's a huge, I spent a long time talking about that because obviously that is the biggest point of the portfolio. A lot lives and dies by how Bitcoin is doing. Okay, the next one is Ethereum at 14%. I'm really excited about this right now. Ethereum has got a lot of great things going on the Ethereum blockchain, and I can see Ethereum going to 10K by the end of this cycle to mid 2025, and end of 2025 will be the end of this cycle, just like middle to end of 2021 was the end of last cycle, and 2017 was the end of that cycle, and so on. We're doing the same thing again. Okay, and then we've got the next one. This is our first ETF, or not ETF. This is our first equity. Okay, so this is a target date fund. This is kind of like my insurance. This is not managed by me. This is a company. This is BlackRock. No, not BlackRock. PIMCO that manages this is a target date fund. So it's basically what a target date fund is. It says, okay, hey, Steve's probably going to retire when he's in 2060. And so we want to make sure he has money by the time he retires. So right now it's probably, I imagine, the way the financial advisors are managing that right now, they're putting most of that into equities. That will probably turn into more bonds by the 2060 target date. And yeah, so that's my third biggest thing is it's kind of my, let the other guys who are financial advisors manage that portion of my money. I kind of hate it, but at the same time, it's kind of like that one thing that protects me against me, because I do a lot of things like buying Bitcoin, Ethereum, and I do a lot of things, and those things have paid off for me. But if those things don't pay off, this is like my bailout plan. It's like, okay, these guys will help me out so I can retire when it's time to retire someday. And then BlackRock, BlackRock has an equity index fund. This is 9.18% of my portfolio. This is basically your this is like their version of the S&P 500, okay? So it's just buying the biggest companies in America. That's pretty much what this is. I imagine this target date fund is about the same as well. I can only imagine that they're very similar to each other. There's probably a lot of the same holdings in these two funds. And that's pretty much a little over 20% of the portfolio are those two funds. And then the next biggest thing is cash. This is just money in the bank, earning the 4 or 5% finally that the banks are paying us. They're actually incentivizing us to keep money in the bank now. It wasn't that way for a long time. And most of this cash, what it's being used for is to dollar cost average into things like Bitcoin, Ethereum, and other cryptos right now while the cycle is in momentum, while we're moving in through this crypto cycle. And so cash is coming in as I earn money through my other ventures. Money goes into that cash account, and then on a daily and weekly basis gets dispersed on a fixed schedule into these different funds. Largely, by and large, it's going into things like Bitcoin, Ethereum, and other cryptos, which we're going to talk about in just a moment. And then, like I said, when the cycle's over, there's going to be I have a plan to aggressively, and maybe I'll talk about that later or in another video. There'll be a plan to exit those at the end of the cycle, and then that money will get put either back into the cash account and or put into some of the equities, depending on where equities and the climate with equities next year. I don't know what that climate will look like, but we'll see. Okay. Then you have the next one is gold and silver. So this is just another one of those things where it's just like, hey, you know, we're doing a lot of crazy things or what would be perceived as crazy with some of these other things like Bitcoin, Ethereum. We are doing some big stuff that way. And so gold and silver is a way to kind of label or stabilize the playing field with something that has been around for tens of thousands of years, and something that kind of builds a bedrock for everything to be built upon. And so it's kind of nice to diversify with gold and silver. Um, um, there's a lot of ways you can do this. I'm not going to tell you how I do this just for personal reasons, but you can buy gold and silver obviously physically. You can buy gold and silver through ETFs online. So you can actually buy gold and silver, just through Robinhood or Vanguard or Fidelity. There's ways you can buy gold and silver and have that part of your portfolio without even physically owning it. There is something nice about physically owning it, or even doing a mix of the two. Another way you can do gold and silver is through you can buy mining companies. This is a pretty strong method that a lot of investors use, like Warren Buffett. He'll buy gold mining companies. I've done the same. But however, most of mine is just by flat out owning the gold or silver. And that's about 7 to 8% of the portfolio. The next thing, and this has been a rising star, is Solana. And this is 6.76% of my portfolio. This is the third biggest crypto that I own right now. Um, and a lot of this wasn't even through like I think when I added this, it was like 2 or 3% of the portfolio. It was just a cash purchase, and now it's worth nearly 7% of the portfolio. So a lot of that was made through just pure capital gain. That wasn't even like just me adding to it. It was just a really good call on my part to pick Solana, and it is now just behind the gold and silver fund, which is really, really cool. Solana, I expect to continue to do. I think it'll be one of the biggest outperformers, and I believe Solana will probably be one of the biggest winners during this next bull run that will end again, like I said, mid to end of 2025 is my belief. Again, not financial advice. It is my belief based off my own research. You can do what you want to do. And then so there you go, Solana. There you go. Cardano's another big one at 2.66% of the portfolio. That's the fourth biggest crypto in my portfolio. And yeah, it's just I don't know if I have as big of a belief in Cardano as I do with Solana or Bitcoin or Ethereum, but it's one of the biggest market caps of uh of the crypto world, and so I thought it might be worth at least owning some. Okay, the next biggest one, and I really need to do a better job with this. And again, the reason why this I didn't realize it was this small, but I'm only 2.55% of my portfolio in the international fund. This is basically BlackRock's biggest international fund right here, and it's only 2.5% of my portfolio. And so this is just investing in companies that are not from the United States. This is specifically like, Samsung, um, car makers in Japan or South Korea. Trying to think. What are some of the biggest companies? Um, there's just some big companies in China. Um, but yeah, that's what's in there. So you're basically investing in international companies. Internationally, uh, the international stock market historically has never done what the U.S. stock market has done. It is really quite a unique thing to have a U.S. stock market. It is, people all over the world try to invest in the U.S. stock market because of the returns that we're able to get here consistently. It really is remarkable what it's done for so long. I don't know what the future holds. I'm not going to speculate that in this video. But I do believe there is a need. This is for me personally. Again, as I was actually going through this exercise and putting together this video, I kind of realized I need to get more money into that international fund. Um, my game plan is to kind of, again, I want to get through this crypto bull cycle, and I imagine that number will go up substantially. I do think I would like that to go up to 5 or 10%, perhaps more of the entire portfolio. But again, it's hard for me to do that because historically, the international funds really just have never made those types of returns. I think this international fund averages like 5 or 6% a year. Um, and they're just not huge returns like you're going to get in the S&P or some other US fund. US equities are going to double, triple, quadruple what the international funds are going to do practically every single time. And when US funds go down, these are going to go down too. It's not like they diversify. It's not like you're going to negatively correlate. They don't work that way. They correlate together. When one goes up, one goes really up, and that's usually the US funds. And when one goes down, US fund will go down harder. International fund won't go down as hard. Or actually, no, I take that back. I've seen the international funds go down harder. Um, uh, when the US funds go down, and they can go down together about the same, but they don't generally go up the same. I've seen the international funds not go up. So that's why a lot of people don't like to invest internationally, but it is one of those necessary things, right? Okay, the next thing, and this is huge. I actually Polkadot this is another crypto. This is my fifth biggest crypto, Polkadot. I've put quite a bit of money into this recently, even just this week. I put in a substantial amount of money into Polkadot, even just this week, and that represents 1.91% of the portfolio. And I imagine that number is going to get bigger. Okay. The Polkadot blockchain has the most projects, I think, even beating Solana. There's more dApps happening on the Polkadot blockchain than any other. And so Polkadot also is undervalued right now. It's at $10 a Polkadot, I think. And when you look at Solana's already at all-time highs again. Polkadot has not gotten there, and there's a lot of really good things happening there. I do believe Polkadot is undervalued. That's why I've put more money into it. Time will tell. My target on Polkadot through this cycle is I believe we are going to get back to at least all-time highs from 2021 in the last cycle, which is $55 a Polkadot. We're currently at 10. That would be a 5x return if that works out. Ideally, we get to $100. That's what most people are saying from what I've studied is Polkadot will get to $100 and that would be a 10x return. So I'm really excited because Polkadot has the potential, if it's already 2% of my portfolio and if it actually does 10x, that would be huge. Like that would be a huge addition to the overall portfolio if Polkadot actually took off. And I do believe it's going to be good. XRP is right up there too. It's at 1.88% of the portfolio. Um, and it's just under 2%. XRP is currently going through a lawsuit right now, and they've been going through for a lawsuit for a long time, but they have some of the greatest technology as far as crypto goes. It's like the fifth biggest market cap of all cryptos. If I recall, I think it's the fifth or sixth. By the way, Polkadot's like number 12. And that is actually I'm a little bit heavier on Polkadot than XRP, but XRP is one of those things I guess I'm a little bit hopeful with Polkadot or with XRP. Maybe I'm too hopeful. Um, I wonder if my money would actually be better off in other places. I hate to say that in hindsight, but I'm just reluctant to get rid of my XRP. It's one of those things where I'm just hopeful that it will take off. So that's why I still own XRP. Dogecoin, again, this is just one of my bags that I'm holding right now through the bull cycle. As Doge takes off in this cycle, I plan to hold it. It's at what, 14 cents a coin right now. I do believe that this one will easily get to $1 per coin when the cycle is over next year. So if that gets to $1 per coin, you're looking at like 7 or 8x return, so long as you close that out in time. Because the other thing that you got to notice with some of these smaller altcoins like Doge is that if you don't exit quickly when the going's good and you don't exit quickly, you're going to get yourself into some trouble. So anyway, I'm going to monitoring that one closely, but I'm just keeping it close to the chest right now with Doge. Okay, S&P 500 VU. This is just in another fund. This is 1.37% of my portfolio. The only reason why this number is not bigger is because most of my S&P holdings are technically tied up with these two funds up here. And so that's why this just S&P VU is just not as big as you think it ought to be. It's just because this is in a totally different brokerage that with different purposes. And it represents a little over 1% of the portfolio, but most of the S&P I actually own is tied up in these two funds up here, like we've already established. And we're kind of starting to get down into some really small percentages of the portfolio. We're now going to go, everything below this is now less than 1% of the portfolio, but there's still fun things that I invest into and I believe in. I hope to get more money into a lot of these things that we're going to discuss down here. We'll go a little bit faster. I want to get in more money into those things, but I just can't quite do it yet while we're in the middle of this crypto bull run. Once this is over, then I imagine that these will start to pile in and we'll get a lot more money into some of these others. So real quickly, this next one is ARK. This is the flagship ETF by Kathy Cook and the ARK Fund. This is one of my favorite funds ever. So the ARK Innovation ETF basically is just a actively managed fund that Kathy Wood and her company and group of people have put together. and I like it. So and I used to have a lot more money in this. I've taken a lot off recently again to do a lot of other things with. I actually sold a lot of the ARC that I had a couple years ago to buy some rentals and to build into some more real estate. Um, but the ARC innovation is awesome, and I hope to get more money into it in the future. After I'm done with this bull cycle. But basically, what they do is they look for opportunities. They look for up and coming companies that are breaking through innovations and doing all sorts of awesome things that have huge potential. This could be medical. This could be robotics, AI, um, cryptocurrencies. They invest in companies that are just doing amazing things. So the ARK Innovation ETF is really awesome. This fund, I will tell you, will experience some of the biggest swings. Like you could have a 300% return in 3 or 4 or 5 years with this fund, but then the very next year you could have a 60% sell off, right? So it definitely goes both ways. This is my last crypto, I believe. This is Render Coin. This is not, I haven't done a lot of research on these guys, but I looked into it and I saw that there's been a lot of volume pushed into Render Coin. So I put some into it, recently. Um, it is the coin I've done the least amount of research on, thus it's the coin with the least amount of capital, but it is a good coin that I like. The next thing I have is QQQ. This is just the NAS 100. Just below that, I have the international fund. Again, this is just from a different portfolio. This is different. This is about 0.66% of my portfolio. So I guess I have technically, if you add this up plus this, I have a little over 3% of my portfolio in international funds. I guess you could look at it that way. Then I have a mid cap fund, which is 0.61% of the portfolio. I have a small cap fund with 0.57%. I have USD, which is a 2x semiconductor ETF. And so when semiconductors, which I think this is tied to SOX, which is SOXX semiconductors. Um, so when this ETF goes up, USD goes up by 2 times the amount, which is kind of cool. The next one is the Met or MeTV. This is the Metaverse ETF. So this is investing in technologies that are pushing the Metaverse movement. You've heard of Oculus from Meta. Apple just made their own um, version of an Oculus. I think it's just called Apple Vision. This invests in that kind of thing. You have QLD, which is 2 times QQQ. So this is 2x. Whenever the NAS 100 goes up, this goes up by 2 times amount. When QQQ goes down, this goes down by 2 times the amount. So it's a leveraged QQQ. Then you have IJH. This is a mid cap S&P 500 ETF. Here's the SOX semiconductors. This is just 1x. This is called BITO, Bitcoin Strategy ETF. This is very small. Again, all of these are very small. I don't have huge holdings with these, but I'd like to get more money into these in the future. I just have been really focused on the bedrock stuff of my portfolio plus the cryptos right now. I'd like to get back into these again. Then you got ArcQ. This is autonomous technology and robotics. ArcF, which is fintech innovation. This is also Kathy Wood's uh, company with Arc. And then you have ArcW. This is next generation internet. They're helping get internet globally. You have the small cap ETF by IJR. And then we have ArcX, which is space exploration. TAN is solar ETF. I love that name, by the way, TAN. So this is just investing in solar technology. And then the very last one, which is an ultra small part of my portfolio, which is PBW. This is a clean energy ETF with 0.04% of the entire portfolio. And that's it, guys. And so everything in there, This is my portfolio. Everything in there made a 16.98% return. Some of these didn't go up, some of them did, but the net return after losses and cash doesn't really make a lot of money either. So, a lot of this stuff didn't even make that much, but nonetheless, the portfolio still made a 16.98% return, which is pretty dang cool. I think it was led by just the recent push in crypto. Fortunately, I was already invested heavily into crypto before this, more recent push in this bull run. I do believe now, where am I going next with this portfolio? So I wanted to kind of recap that. So here's my game plan. In the most near future, today is March 19th, 2024. I do believe crypto is going to go down a little bit before the halving. Maybe even after the halving, it may surprise people for the first couple of weeks that crypto may go down. I do believe over the summertime, especially as you get into the fall and winter this year, um, and after you get past this election this year, um, watch out because the crypto is going to go. It's going to be crazy and it'll happen quick. It's already happening. I think Bitcoin has already exceeded my expectations. I thought it would be between 45,000 and $50,000 per coin by the halving, which is next. It's in a month from now, and we're already, at 65,000 or whatever. So it's already gone above what I believed it would be at. If it goes back down to 45 or 50, again, my plan is to take most of the cash, put it back into Bitcoin, Ethereum, um, and maybe Solana and a few others. Like Polkadot, I do want to increase my Polkadot holdings a little bit more. Um, and then, like I said, next year, the plan is to liquidate the vast majority. This will happen over 6 months. So, like between May or June next year, depending on where things are at, I plan to liquidate over a 6 month period, 90% of my Bitcoin, 90% of my Ethereum, 90% of my Solana, 90% of Cardano, 90% of XRP, Polkadot and Doge, and I guess Render as well. All of that will be 90% over 6 or 7 months will be liquidated, put into either cash or slowly be put into these funds right here. And then we'll, take that money, put it into there. My other plan is to take the other bit of funds and go more into real estate. Again, it also depends on where real estate is next year. We'll be taking these funds and acquiring more real estate. Um, and that is the game plan. And then 2026 will be a terrible year for crypto. Just an absolutely terrible year. It'll just be like 2022. It's just match, just like 2018 was a terrible year for crypto. 2022 was a terrible year for crypto. 2026 will be a terrible year for crypto. And then 2025 will, like I said, be great. The rest of this year should be generally pretty good. Just like 2020 and 2021 was good, just like 2016 and 2017 was good. That's what I'm expecting. Okay. And then each time I've participated in one of these, like I said, I've always gone into real estate afterwards. I'm hoping that rates in 2025 do come down a little bit. That would be nice. Hopefully I can find a deal in real estate again to get a few more properties would be awesome. So anyway, that's what I'm doing right now, and this is what I've done, guys. So if you guys have questions, let me know in the comment section down below. I'd love to know what your questions are. And I'd be more than happy to tell you kind of my philosophy and what I'm doing. So, all right, guys, have a fantastic rest of your day, and we'll see you guys in the next webinar. Thanks for coming.